the season for all your holiday favorites, like A Very Jonas Christmas Movie and Home Alone on Disney+.
Did I burn down the joint? I don't think so.
Then Hulu has National Lampoon's Christmas Vacation.
We're all in for a very big Christmas treat.
All of these and more streaming this holiday season. And right now, save big with our special Black Friday offer. Bundle Disney Plus and Hulu for just $4.99 a month for 1 year. Savings compared to current regular monthly price. Ends 12/1. Offer for ad-supported Disney Plus Hulu bundle only. Then $12.99 a month or then current regular monthly price. 18 plus terms apply.
Reality radio for a really great future. We're talking real money.
Ladies and gentlemen, the following podcast/broadcast or broadcast/podcast contains an important message for all you young whippersnappers out there who think you know more than us old-timers about money. We're going to share it with you in just a minute, but first, welcome to the program. Hi, everybody. I'm Don. That's Tom. This is Talking Real Money.
You scared me for a minute there. We hadn't talked much today. And
some other guys showed up.
What's going on here? So glad you feel better. So.
Well, I got a little frog in my throat. We're here to talk about money with you. And we want you to call us with your money questions, but we got stuff we need to share with you, too. Our phone number is 855-935-TALK. That's 855-935-8255. And us old-timers here have a little message for you young whippersnappers. You may be very intelligent, and I am not doubting your intelligence. You in the later end of Gen Z or the later end of millennials and early Gen Zers, you guys, smart. You're really smart. I give you smart. You don't have perspective, expertise, wisdom. And that's a problem when it comes to you guys your peers giving you advice on Tiki-Talkie or YouTube, because they're giving you some really bad advice.
And you've heard us on this program talk about Social Security, not the program because of Social Security, because we still do believe that it will be fixed in the requisite number of years before there's a real problem with the benefits being reduced.
Actually, there may be a real problem right at the time they have to fix it. It'll probably start a little bit, kind of like the government shutdown. It'll be like, okay, it's getting a little painful. We got to fix it.
That would not surprise me. But what we're talking about here is when to file, when to claim Social Security. Now, you've heard us say many times, wait. Just wait. Yeah, wait as long as you can, because that benefit basically grows at 8% a year. And there's not a whole lot of things that are going to make you that.
That's a safe 8% a year plus inflation.
Yeah.
Because they're getting you get the inflation adjustments too.
I know. And yet, as the folks you mentioned, the finfluencers on TikTok and YouTube are telling people, well, no, go ahead and take the money.
Take it at 62.
Invest the money. Take it at 62. Invest it, because you'll end up with so much more money. This is easy money to make.
And that's where my point comes into play. The fact that you're relying on recent past. You don't have perspective. I mean, really, most Gen Zers do not remember 2008.
No.
Very few were, some weren't even alive in 2008, some of the younger ones. Or just barely alive. You were infants. So you don't have perspective. So you look at today and you go, well, the stock market consistently returns double-digit returns, and Dave Ramsey agrees with me. How can I be wrong?
Well, you could be wrong, because if you look back, there have been periods where the stock market has made you very little or nothing. You could look back and see deep, bad bear markets. In fact, I had lunch with our friend Paul Merriman yesterday. He was reminding me that I'm a tad optimistic about future returns because of really what's happened for the last 20 plus years. So again, but Social Security, as this article points out, is such an important part of your retirement that should not be taken lightly.
Now, if you could take Social Security at 22, then it might make sense. But bear in mind, you're not taking it until you're in your 60s. And when you're in your 60s, you probably aren't taking that kind of risk with your portfolio, putting it entirely into equities, and then comfortably sitting tight, even if we have a 10-year bear market. That's not likely in your 60s. You're going to need the money. sooner than a Gen Xer or a Gen Zer is, I should say.
Yeah,
Zer.
and the problem with this, if this sounds like just a discussion for the point of discussion, that's not true. 3 million people filed claims to initiate Social Security in the first 9 months of this year. That's up 13% from the same period last year. People do get panicked by the fact that, A, I think the program's going to run out, or B, I heard somebody on YouTube say this is a much smarter method than Tom and Don waiting for my benefit.
Yeah,
way better.
We realize, and we do realize how hard it is. I mean, I took mine at 69. I thought about going to 70. I looked at the difference. I went, it's not that great.
I'm waiting until 70, which is still, I think, 10 or 12 years for me.
Well, yeah,
right?
you've got longer than I do.
I guess
I'm just 6 months, 6 years.
Don't add it up. You won't be able to finish the show. You'll barely get through the show.
Okay, I'm quitting. Goodbye. I'm out of here.
That.
So, but here's the thing: you need to try to build that secure money as much as you're able, and that 8% return. See, this is the thing we keep forgetting. That is a guaranteed 8%. There is no other guaranteed rate with a high degree of safety, with like 100% safety, that's going to get you anywhere near that. Half that is about as close as you can get.
Yeah, about half that, Don. And the thing is, again, for those of you who are analyzing these things, every plan I've ever looked at works better waiting. Every plan for the surviving spouse, that's the other part of all this people forget. For most of us, the higher wage earner usually is the older person, not always, but generally. They wait longer, they take their benefit. I know. And then guess what? You're gone, and that person who survives you has a much bigger benefit, too. If you care about them, maybe you don't like whatever you're left with, you're left with.
But this advice is truly bad. And the fact that it's still being promulgated to such a degree is kind of advice malpractice on the part of these folks, because they're getting you into something that's really risky. 855-935-TALK. Call.
Tom and Don are talking real money.
Hi, Don McDonald here. So, what's your plan for retirement? No, really. What's the actual plan? Because hoping the market goes up, stockpiling random investments, and praying your gut instincts are smarter than Wall Street is not a plan. It's a guess. And when the market gets bumpy, and it always does, guessing leads to second guessing. And second guessing leads to panicking. That's why you need more than a portfolio. You need a purpose, a strategy, a real financial plan built just for you by a 100% fiduciary advisor who's legally obligated to act in your best interest. Imagine that. Start your plan today with a free, no-pressure meeting at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because your future deserves more than crossed fingers and wishful thinking. By the way, no sales pitch, no obligation, just smart help for real people who want to stop guessing and start planning. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more details.
Your guides to a really great financial future. Tom and Don are talking real money.
I want you to imagine with me. Clear your mind. Close your eyes. Breathe in. Breathe out. Imagine just a little over a month ago, about 45 days ago, the stock market started to crash. And over the next 6 weeks, it declined by 30+%. How do you feel? How would you feel as an investor? Would you think you'd made a mistake? Would you be scared? Would you be panicking? Well, we kind of expect that from stocks. It's the volatility of the stock market. It's what gets you those big rewards. But I'm not talking about the stock market. Oh, no. I'm talking about Bitcoin.
Oh, we just can't contain our glee around this, can we?
Well, look at this. It's gone from $124,000 in October to $84,500 today. And it's been below that. It's been down to 80.
What about that crazy company that loaded up on all of it with borrowed money?
Strategy. You mean?
Yeah, how's that one working out?
This interesting thing about strategy is that it proves our assertion that leverage is lovely on the upside for your returns.
And then?
Disastrous on the downside, because they're down 60%.
Wow.
In the last 6 weeks. 6 weeks.
Yeah. My basic take on that is if you really like that kind of thing, there are roller coasters that do it, and it's cheaper. You won't spend as much money.
There's a lovely roller coaster in Vegas that goes from the top of a building right to the casino.
It just drops
so
you.
You can take the elevator. You can take the elevator up. So you get the ups, then you got the down on the roller coaster, and then you got the ups and downs in the casino. You can play that game and get a lot more fun out of it than playing it with cryptocurrencies. And by the way, I was doing some cryptocurrency research a few days ago. And the more I read, the more I researched. And I researched this like crazy. You know, for all these people who say, you don't know what you're talking about, I probably do 2 or 3 hours of research on crypto now a week. Really. At least a couple.
On various coins or
just on the market and on blockchain. I'm trying to really wrap my head around something that they're telling me I'm too stupid to understand. But the funny thing is the only people who seem to be telling me I'm too stupid to understand seem to be people who own crypto.
They want you to buy their crypto before it goes
wrong. So
further.
Anyway, I'm writing short stories, right?
Yes.
I'm writing one about crypto.
Oh, no.
I am.
It's going to be part of your podcast?
New Tales Told. It'll be after the holidays. It's going to go up. I'm about 3/4 of the way through it, really fine tuning it. It's a great story. You want to have the living daylight scared out of you? It's a great story. You want to know what the ultimate end for crypto is? I theorize in this story.
And I think that's a great capper for the Social Security discussion, because Social Security is a set benefit. It does have an inflation add-on to it, and it grows the longer you wait. If you take that and then somehow invest it in something that can go way up and way down, not just like stocks, but crypto, you're taking a chance with something that should be a perfect piece of income for a very long period of time.
And it's all in an attempt to be some sort of a winner. It really, when it comes right down to it, it's not about protection. It's about getting rich, really.
Yeah. At the end of the day.
If every one of these people who choose us out over crypto was truly honest with themselves, they're not in it because they want to protect their assets against a disaster, which is what my story's about. They're in it because they want to get rich.
It always is, right? That's where the fun, that's the excitement.
Yeah.
So
it's all about greed. I am the more I read, the more convinced I am that it is all about greed. And greed is one of those emotions that leads us astray. And that's what we try to instill in everybody who listens. It's emotions. No matter what kind of emotions, it's emotions that will do you the most damage. You've got to learn to remove them from this process. It's hard to do. Oh,
it's hard. I mean, again, going back to the conversation we had with our friend Paul Merriman yesterday, he looked at, I told him about my portfolio, and he knows how old I am. He goes, you're pretty aggressive for your age. I said, yeah, but I've been making a lot of money lately.
Exactly.
Yeah.
He made How aggressive are you, by the way?
Well, I'm still 80-20, but that doesn't include, as he correctly pointed out, holding a certain small, non-publicly traded
basically
company, right?
From our own business.
Exactly. That's what I'm saying.
Yeah.
So his point was you should put that in and then look at what your mix is, because then it would be really
So it's making my 65, 45.
Exactly.
I mean, 35 look pretty aggressive too, given his advice.
Exactly.
Although that would mean pretty much that I would have to take most of my portfolio and convert it to bonds.
Well, and that's the problem, right? But the bigger picture with that, of course, is having the plan that says, will it all work at this a level of risk? And mine will work with less risk. So I'm taking risk that I don't need to take. Not unlike all the things you just talked about the last 20 minutes, correct?
Yeah, exactly. So, and that's why we always come full circle. Everything we talk about just comes right back around to the one thing that can best, and is proven, by the way, through massive amounts of research, to wring out the emotion and to force you to behave in a sensible, reasonable, logical, disciplined fashion. And that is the plan. I've been saying the plan. You need the plan for decades now. And yet, not a lot of people have the plan yet.
Yeah. And with it, you don't make mistakes like this, and without it, you could go bad.
855-935-8255 is our phone number. We got lines open for you now.
Tom and Don are talking real money.
This holiday, discover meaningful gifts for everyone on your list at Kay. Not sure where to start? Our jewelry experts are here to help you find or create the perfect gift, in-store or online. Book your appointment today and unwrap love this season. Only at Kay.
For your real life and real future, Tom and Don are talking real money.
We absolutely love your questions, and the only time you can call us and talk with us live is when you call on Saturdays at 855-935-TALK, 855-935-8255. I'm Don McDonald along with Tom Cock. And you can also send in questions, though. You go to talkingrealmoney.com and do that. It's pretty easy. Oh, by the way, if you want to be notified when my crypto story goes live after Christmas, go to shortstoryverses.com. It's all one word, shortstoryverses.com.
Yep.
Shortstoryverses.com.
You can find it right there, right?
You can just give me your email address, and then I'll send you notifications when new stories go up.
Okay.
And then you'll know. Because
I love it.
I got to tell you, I know that it's my story, but this one's really fun. It's not fun. It's fun. It's fun in a sort of a scary, fun way, kind of. Anyway, thanks. So send your questions into us. You can speak them or you can type them in. Tom is a big fan of typed because for some reason he's got a paper fetish. So feed his paper fetish. And
it still works.
You still got paper there?
I still got paper. I still got questions. This one comes from Vinton, Virginia, from Ron. He says, I've listened to you guys for years and never miss a podcast. Thank you for that. Called this question in a month ago, but not heard the answer yet, so I thought I'd write.
Okay.
My daughter and her husband are in their mid-40s. Each will have a few million in retirement accounts that they max out and manage on their own. Now, it doesn't say they have it. It says they will have it. So they're in the 24% tax bracket. Yeah, they're in the 24% tax bracket. And they let's see, they're able to live off the paycheck instead of two. So I don't quite understand that, but in other words, maybe that they're making enough to
it
cover
sounds
the
like
bills.
they can live off their paycheck and save some still.
Yeah. Recently, here's the critical part. Recently, a financial advisor looked over their portfolio, said they had too much money in the bank, and that they should get an Asset Flex LTC account from New York Life.
Oh,
do you think it would be better to have a brokerage
I can tell
account?
you that this is not a financial advisor. This is an insurance salesperson.
Yeah. Do you think it'd be better to he asks if have a brokerage account for liquid money instead? I can almost guarantee you the answer will be yes. I'm just going to tell you. Well, because LTC is long-term care,
long-term care insurance. But what they're talking about is one of these long-term care policies with a little ridiculous annuity on it that pays the guy a big fat commission and that is the silliest. It's a terrible investment, particularly for someone in their 40s. And by the way, the long-term care portion of the policy, I've read most of these. I've looked them over pretty carefully. It tends to be very sparse. It's a very small benefit. It's either a small daily amount or some sort of a max cap that's, like double what you put in or something, but it's not any kind of a big deal.
Now, that's not to say that somebody in their 40s might not look at long-term care.
I don't know.
Depends.
Given the prices of it these days.
Yeah, I know. And today there's most of the policies are written as hybrids. I mean, they really can't just go buy a premium only policy because that's an issue.
And then they've got these limits on them because the insurance companies found they got in a lot of trouble when they left them more open-ended. So now they've tightly controlled it to make sure there is no chance, literally no chance,
that they're going to end up on the hook.
They're going to lose money on you.
Yeah, well, I buy that.
So, no, this is, and I guarantee, and I shouldn't say the word guarantee, I am confident that the person they're talking with is either a friend or a relative. I am so confident.
That would pitch them this for cash.
Yes, because how else do you find that terrible financial advisor? It's usually familial or affinity-based.
Yeah. Well, okay, but let's just... At the highest level, cash, this should not be consideration for all for cash because that if it is truly cash for the purpose of cash, that's a separate issue. If you need insurance of any kind, that's a separate issue. If you want to have a brokerage account for the long haul, that's a separate issue. That should be invested in stocks.
Anybody who is in their 40s and is on track for millions in their portfolio really needs to know how much cash they should have, where
That's a good
those
point.
assets should be invested. Sounds like I am repeating myself.
That I'm hearing an echo.
You're
I'm
hearing
gonna
the
keep
plan
listening,
echo
but-
again.
Yeah,
Plan,
exactly.
plan.
So, if you have a plan, then you're not just racing out and buying things that are sold to you, right? And we see that in the industry all the time, where people say, well, this guy just came along and said, I really need this for my cash. Well, how does that fit?
Right, and maybe I need to say it more clearly. You need to have a plan.
Oh, that sounded good. That sounded
There you
really
go.
good.
I just wanted to get it across. They need a plan. They need a 100% fee-only fiduciary advisor that they pay a few $1,000s to, probably, if they're really on track for a great future, and get an actual plan that carries them through the next 20, 30, 40 years. 855-935-TALK is our phone number, and once again, all those lines are still open.
Tom and Don are talking real money.
This is a real good story about Bronx and his dad, Ryan, real United Airlines customers.
We were returning home, and one of the flight attendants asked Bronx if he wanted to see the flight deck and meet Captain Andrew.
I got to sit in the driver's seat.
I grew up in an aviation family, and seeing Bronx kind of reminded me of myself when I was that age.
That's Andrew, a real United pilot.
These small interactions can shape a kid's future.
It felt like I was the captain.
Allowing my son to see the flight deck will stick with us forever.
That's how good leads the way.
Reality radio for a really great future. We're talking real money.
And our favorite way to talk real money is to actually talk it with you. And for that to happen, you need to do something. It's pretty easy. You find that phone. I know they don't look like the old phones for us old people, but it still works like one.
You don't have your rotary anymore, don't you? No.
No. You know, okay. I do actually, though, still have a touch-tone Mickey phone in the other room.
Wow.
Where Mickey's hand is
attached
holding
to
the
anything?
receiver, and you lift it
work?
up. Yeah, I guess. I don't have a landline to test it. I don't know. Okay. Anyway, we got it years ago when I worked at Disney. They gave it to me.
That's right.
They gave me more stuff. Anyway, 855-935-TALK is our phone number here, so that's what I was going to tell you. Call us because we like talking with you. And now let's go out to the opposite coast from our radio station. Let's go to Baltimore, Maryland, home of the Ravens. And Eugene, welcome to Talking Real Money.
Hi, this is not the first time I've talked to you. And
yes.
Excuse my voice. I've been sick for 2 weeks. I'm starting to feel better. But
man,
I want to give
everybody.
you guys a compliment. There's two nationwide shows that I'd like to listen to. One is Clark Howard, and one is you guys. I consider you to Clark Howard of financial advice.
Well, that is very kind, and we'll take that.
Yeah, absolutely.
Thank you.
Clark's
That's
been
really
good,
nice, yeah.
good at what he does for a very long time.
Yeah.
Yeah, I've listened to him. I like him better now that he doesn't have the radio show, and he and Krista just do that podcast 3 days a week. But my ask you, I have 5 buckets of money. One of which, over the years, is just accumulated cash. And listening to you guys, if you could give me the ticker symbols of 3 mutual funds that I could buy and put into this, with this bucket of money, which ones would you recommend? Not knowing much about anything else about me.
It's impossible because we don't even know what the bucket's for. Which bucket is this that has all the cash?
Is this the bucket to increase more buckets?
Is it your emergency money bucket, or is there another bucket for that?
No, I got enough emergency money everywhere.
Okay, so this is the bucket that you're saving to buy other buckets when you think the price of the buckets is better?
Yeah, it's a dip bucket.
It's too many buckets for me. I'm
bucket tucker.
Wow.
I'm just bucketed out. No, here we go.
I know you are big on the dimension and Advantis.
But you see, we're suggesting things in a vacuum.
Yep.
And that's not the way we work. We don't like just going, hey, this is today's good thing, because we don't believe there is today's good thing. I would need to know why there's so much cash in that bucket and why you haven't invested it already.
Well, because let's put it this way, it's around $250,000.
Yeah.
And it's about 5% of my net worth.
Okay, but again, that doesn't.
Okay, but then what's the purpose of it in the longer haul? Then, yeah, what are we doing with it?
Well, to be honest with you, it's play money. But I trust your calls on the horse race rather than mine.
Okay, see, we don't play with money. That is truly that is one of my core tenets. I have tried to. Money is too important to play with.
Mm-hmm.
I don't like gambling. I hate gambling. I can't suggest anyone gamble, and that's kind of what you're making this sound like. But, however, if this is 5% of your net worth, and it serves no purpose except to make you more money, well, I would always have it invested. I would never have it sitting there waiting for an investment opportunity, because we don't believe you know opportunities before they happen. We believe you only know about them after they've already happened, and then it's too late to take advantage of it.
Right now, it's in a federal money market, earning 4.5%,
which doesn't stink, but
if it's money you're never going to use to create a new bucket, that's not where it should be.
Yeah, but let me ask you this very important question. You take this money and you put it into an aggressive equity fund, and next month or in January or whenever, something bad happens and the value of your $250 goes to $125.
Yep.
How are you feeling?
Like I did in April, when I was pretty upset about everything.
Yeah, that's my problem.
And I've learned over the years, I'm 77 years old, that you don't panic.
All right, here's the thing, though. You have that's only $250.
If it's in the right place, it'll come back. $
250 is 5% of your portfolio. You're in very good financial shape.
Yeah, we've talked to him before. We know that.
Right. So here's the thing, Eugene. Why aren't you spending it on something?
Or find a charity or some other place for it.
I would be spending it. I would be using it for something that makes my life better, or, as Tom said, the life of someone else better, and brings me joy, therefore.
But even with that, I would still, if you walked in my office and said, look, this money's forever, I'm not going to use it, et cetera, I would pick, one of the one fund global funds and put it there and let it ride.
Probably.
That would be it. There wouldn't be anything more special to it than that.
But if I was giving you the right advice, my advice would be it's 5% of your portfolio. It's not your emergency money. You can definitely afford it. You're 77 years old. You're not going to be with us for, 3 or 4 more decades. Your time is limited. Either make yourself or make somebody else happy with it, because money's really good at doing that.
Believe you me, I've got 2 married children and 4 grandchildren, one of which has just finished the first year of college, so they're all in mind.
Yeah. Well,
that's all I could say.
Yeah, $250,000.
The other thing I'd say, since we've had several calls with you, Eugene, which we always enjoy and we really appreciate your kind comments, probably sitting down with an advisor at this point and saying, try just parse things out to make sure they're doing everything they can for you. The money I'm talking about at 77. That's all I'm going to say.
If it's about investing it, that would be a good idea. Thank you so much for the call, Eugene, and the nice comments. We really appreciate it. Our phone number is 855-935-TALK, 855-935-8255. If you call, you don't have to say nice things, but we appreciate a conversation. We hope to answer your questions.
Tom and Don are talking real money.
In America, half of every dollar spent on brand medicines goes to entities who don't make them. While middlemen like PBMs and 340B hospitals drive up costs, Biopharma is investing $500 billion in new infrastructure and manufacturing here at home, and helping patients buy medicines directly at lower prices. Tell Washington to end middlemen markups and put American patients first. Visit phrma.org/middlemen.
For your real life and real future, Tom and Don are talking real money.
All right, let's talk some real numbers on these funds, and then you tell me what you want to do with them, okay?
Okay.
Let's start with the Morgan Stanley Institutional Growth Class A Fund.
Okay, but first, Class A means there was a commission involved in
selling it to them. Paid a 5.25% front-end commission. Annual expenses, 0.87. But wait,
expensive
there's more.
fund, big commission. Yeah.
They
wait, there's more.
They have slightly underperformed the market over 15 years. They've underperformed the index by about 0.8%, underperformed. And yet their volatility, their standard deviation is 28 versus 18 for the index.
So big commission, high expense, more volatility.
More risk, lower return. Does that sound like a good fund?
No, that's not a good fund.
How about ACEIS?
Well, good for the person who sold it.
Yeah.
Yeah.
That is the Invesco Equity and Income A shares. A shares.
Maybe you should explain what equity and income means.
Well,
anyway.
it means it's between a balanced fund and a growth and income fund or a blue chip growth kind of fund with dividends. Anyway, this one has had a 5.5% commission and expenses of 0.77. With a 25 basis point trailer, by the way, on both of those. So the guy keeps getting commissions all along the way.
For 25 years, he said.
Yeah. So here, and that one, by the way, outperformed the index by 0.1%. However, it did it with a standard deviation of 12.5 versus 10.5. So again,
riskier,
quite a bit riskier.
Yeah.
Very expensive. I wouldn't care if you. Who cares? You're going to pay the capital gains.
He doesn't
tax.
say how much. Oh no, he said 120,000.
Yeah,
so I don't know
you're
what
going
this
to pay
basis
the capital
is.
gains tax someday. You don't
That's a good point.
You don't
Yeah,
get away
that's true.
without paying it.
Yeah.
You might as well get it to Vanguard. Have Vanguard do the transaction because then you don't have to talk to the Morgan Stanley brokers who are going to try to convince you this is a bad idea. They will. They're salespeople. That's their job.
Yep.
And get it moved into something that comparable funds at Vanguard are going to cost less than, get this, 0.1% per year.
So the expectation, even though these have performed better than I would have expected for the last lengthy period, is the index would still beat it over time and with less volatility.
The index is doing it with much less risk.
Yeah.
Much
less risk.
Yep.
Mm-hmm.
And more diversification, too. So I would make the change.
Easy for you. Yeah.
You too?
You wouldn't even look at the capital gains. I guess I might try to game it over a couple of years. But I don't know anything about this person's
No,
tax
I probably
situation,
wouldn't
so.
because, I know that I'm going to be sitting there in a very expensive product. I know that I'm paying that extra 7 or 0.8% a year in fees. So why would I want to do that when I can pay less, which improves my overall odds? See, I still have to hope that going forward, they're going to dramatically beat the index to overcome the expenses and the risk.
Yeah. Okay.
So, no,
I
sell them. No doubt I would absolutely
his
sell
question, though, was about sort of the aspect of how to move the money. If
go
you
to
go to Vanguard and you have they'll figure that out.
Bring those assets over.
They'll do it
in
for you.
kind and then sell it. Then if you want to do it over a couple of years, they're at Vanguard and you're not going to get an argument. If you have questions for us, call us on Saturdays at 855-935-TALK or send your questions in on the contact form at talkingrealmoney.com. And if you really want some help, talk to one of our advisors. No cost, no obligation. Just click on Meet an Advisor.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor. Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services. Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.
Hey, Ryan Reynolds here, wishing you a very happy half-off holiday, because right now Mint Mobile is offering you the gift of 50% off unlimited. To be clear, that's half price, not half the service. And Mint is still premium unlimited wireless for a great price. So that means a half day, yeah? Give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. New customer offer for first 3 months only. Speed slow after 35 gigabytes if network's busy. Taxes and fees extra. See mintmobile.com.